love the channel and find it useful in becoming a happy retiree. Subscribe today. We're going to Todd in Mableton. Todd, good morning. Welcome to the show. What's going on? How can I help?
Thanks for taking my call. We sold some land, and so we've got probably about $350,000 sitting in savings accounts, actually in two different banks, and we want to get aggressive with about 70% of that in some sort of investment vehicle, and then, of course, keep about 30% of that liquid. We'd love to stretch this over a couple generations. Obviously, we've got a good opportunity to make the right moves for it. So, anyways, just giving you a call.
Well, Todd, I think that's a super important piece of what you just said, that last piece, and that's multiple generations. So it sounds like you currently, you don't need the 350 for your own retirement?
Do not.
You do not at all. Wow. So it really opens the horizon up to super long-term investing. And if that's the case, then in my opinion, you want equities. You want dividend-paying stocks. You want access to and exposure to markets. And this is a great time. There's no perfect time because we might head another 10% lower for you or another 5%. But this is a good time to get invested. So if it were me, I'd take that 70% that I want to invest, and knowing that a chunk of that, the other 30 is still in safety or stability or cash, and then I'd be going to Vanguard right now, and I would be looking at the dividend appreciation fund within Vanguard. I'd look at the S&P 500 fund. I'd look at the Vanguard Total Stock Market Index, which is a variation. It's even more diversified than just the S&P 500 option. And then I'd look at the international option that they have. And it doesn't need to be Vanguard. It could be at Fidelity. It could be at Schwab. It could be anywhere. But when we get these market pullbacks, Todd, this is the time to be buying equities. It's a little bit painful. It feels a little bit like you're running into danger. It's kind of like you're running into a fire, which seems counterintuitive. It hurts a little bit. But this is the time to be buying in. So any of those equity-based, broad, low-cost ETFs or funds, Todd, that's how I would get this money working. And I would be doing it sooner than later because we don't know when this thing turns back higher. We just talked about how these corrections go. They're very swift. And then we've been getting recoveries in very short order. So I would be doing this while the market has pulled back 3,000 plus points on the Dow. In my opinion, this is the time to be buying into equities, and broad exposure is the way to go. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.